Good morning, good morning. Good to see a few people jumping on. Morning, crew. Good to see you. The 4th of November. I hope you're well, wherever you are. Jason here, joining you for another Wealth Coffee Chat. Hey, good to see you, Alison. Property and valuation module. Well, that'd be interesting. It'd be very cool. Very interesting to see what comes of that, Alison. I'd love to hear a little bit more about what you get up to at uni when it comes to that space. It'd be quite cool to see what the academic world says about valuations. So, team, anyway, good to see you. Let's have a bit of a Wealth Coffee Chat this morning. If you don't know who I am, most of you should, by the way, unless you've been living under a rock or you're new. If you're new, give us a shout out. Say new in the chat or tell us where you're dialing in from. But while we get a chance, quick shout out to the regulars, Sharon, Stephen, Alison, Andrew, Chris. Good morning to you guys. Great to see you up and about. Not so early, but early enough. A reasonably early bird gets the worm. They say. Tanya, how are you? Yep, almost Friday. Thankful Thursday today. Hey, listen, today I want to talk to you about the largest price gap in dollar terms ever in Sydney's history. Crazy times, interesting times, amazing times when it comes to the house price. And, are we in for something? Is there something in this for us as property investors that we might, want to take away from it and have a think about where we're at? And has the time of the apartment come when it might just outperform housing, freestanding houses in one way, shape, or form at some point? Is a regular house out of the reach of a regular, everyday, most of the population? Because in many countries, that is the case. Established older countries who've been around for many more hundreds and sometimes even thousands of years. Some of them have lifetime rentals. People live in houses and they hand those rentals on to someone else in their family. And so in Australia, we from a European settlement point of view, it's a very young country when it comes to the infrastructure, the housing infrastructure that we have. Respecting our native traditional owners of Australia. I'm talking about the infrastructure that came with the European settlement. So, largest gap ever in history when it comes to the Sydney house prices. I'm going to chuck a question out there right now in the chat. As a dollar term, what gap? As a dollar term, that gap is $430,000. All right, 430 grand. That's a pretty significant gap between the average house price and the average unit price in Sydney. But is it the largest percentage gap in Australia? The answer is no. There's a percentage gap. Tell me right now in the chat, have a think about this. Which one of the Australian cities has the largest percentage gap, not dollar gap, largest percentage gap between the house price and the unit price? Okay? Chuck it in the chat. Let's see if someone can get this one. The largest gap in percentage terms, not dollar terms. I've already given you that one, $430,000. Sydney in median house price compared to median unit price. Which city in Australia is that one? And I can tell you now, it's not Darwin. Bob's given it a nudge. He said Melbourne. Let's see what the rest of you guys think. Let's have a bit of a look. So the gap right now, the national gap around the country is 30%. We've got 30% of a difference between the average house price and the average unit price. Now, on the surface of it, on the surface of it. When you look at the median bunched in all together, that's not that significant. That's kind of about right. You know, it's been traveling at about sort of, 25, 20 to 25% average for a reasonable amount of time. And if you have a look at this kind of average line here, check it out. There was a gap, and this is what I want everyone to think about right now, okay? What I want you to notice and look at is at another time in history, history doesn't exactly repeat itself, but Andy Fenton, my good mate, he says history doesn't repeat itself exactly, but it is a good mimic, all right? It mimics itself often. So have a look at this. Right here, you've got history and the gap between the median house price and the median unit price, let's say in 2011, was quite small. And, let's call it 10% for round numbers. It's probably closer to sort of 12 or 13%, but give it 10%, all right? So right now, the gap is 3 times that it has been in previous times. So just think about this in a minute. I'm going to ask you, this is from Alison. This is from the RP Data company, and however they put their data together. It's interesting, which is good you ask. There's a difference between a median value, folks, and an average value. And then depending on how statistic companies look at things, it'll come out one way or another. I always like the idea of keeping, using the same provider, because then there's some patterns in the data, okay? I like RP data. They're good. So let's have a look at this, and we'll get around to this in a minute because I'm going to ask you guys a question. What do you guys think? Tell me, in your thoughts, in your mind, what do you guys think about this idea when it comes to this gap now being 3 times its historic lows compared to highs? What might happen? What do you think might happen? What's historically happened in the past when it comes to this gap? But let's have a look at the winners. And I probably wouldn't call it the winners. It might be the winners or the losers when it comes to the largest percentage gap in Australia at this point in time, as of June 21, 21 of June, about the median gap. Let's have a look at this. Well, Perth has a 38% gap, okay? So right now, if you were investing in Perth, you might say it'd be prudent to get a piece of the median value of Perth houses, right? Okay, still quite inexpensive. You check out the yield and you go, well, that might look quite good. There's quite a large gap to, the next one. If we say the big 5 cities of Australia, the big 5 we're looking at right now, you look at Melbourne. And if you look at the differences in the gaps, team, of, these times here, 20% to 40%. So we've got a 20 points gap over here. If we're looking at sort of Melbourne averaging around about 15, call it 15, we've got a 35% gap. So that's pretty good when it comes to Melbourne from its lows, not as of today, but at another time. And if we have a look at Adelaide, okay, Adelaide sort of bounced along the bottom here, 25 to 53, call that, 25% from its historic lows. And let's have a look at Sydney. Sydney right now, around that 20, up to 54. So let's call that 30%. But the gap in Sydney is $430,000, which is massive, right? Okay. And last but not least, we've got Brisbane on a 58% gap. But you have a look at this, kind of 20% to almost 60% up there. I'm going to round that up to 60%. All right. So I'm going to call the gap over here the compression gap. Hopefully you're following along here and sort of sticking with my thinking. The compression gap between apartments and houses from previous market movements, 40%. So the history of 40% more compression there. And last but not least, folks, look at this. And who's the winner? We've got Ashley. We've got Stephen. You guys nailed it when it come to the look at this. Unreal. 25 to 70. We're looking at certainly, a pretty significant compression when it comes to the gap. Check this out, just like onwards and upwards when it comes to this stuff. And we're talking sort of 40%, close enough there. So what does that mean for us as property investors when it comes to this gap? I call this the compression gap, right? Compress. If the median unit price there could close the gap, that 40% gap, and get back to this average, call it 25%, okay, how much upside value does that represent? And this one's probably, call that closer to 50%, right? So think right now, if this price increased enough to close the gap, what would that be? And that would be, 650,000. Okay, so hopefully you're following along here. Right now, what we've got is we've got the house price stretching out in front of the unit price, houses being unaffordable for the majority of buyers, and then how far or how much can those apartment prices compress? Well, catch up basically, or compress compared to the house price. And so for me right now, what does that mean to us as property investors? Well, I think the unit value in comparison right now, I would give it 5 stars, right? 5 stars when it comes to the marketplace and looking at a few opportunities out there for us to invest in, all right? Because you've got a 50% gap here, a possible compression opportunity, pretty significant compression gap. This could compress in comparison to last time, close to 40%. This could compress 30%. Sydney still, Adelaide, Melbourne's 35% compression from lows. So when you think about it and you think about the affordability, it sticks out quite significantly. For me, this one all day long. Median unit price in Melbourne, I think, is undervalued. We've chatted about this before. And then come down here and you've really got, the Brisbane story also. Now, Canberra's a great story. It's a little bit more different when it comes to those apartment qualities and things like that. They don't build as many apartments down there at certain times. So there you go. Did that make sense? Are you guys following along? The gap was smaller in previous years, and now it's stretched ahead because the house price has taken off faster than the apartment price. And now that apartment price will compress. It will catch back up and probably get to that gap, the smaller gap, which means that price can rise. Anyway, talking around in circles. But the outcome, the point is that the unit market is going to get some attention from the buyers now that, if you have a look at the median house price in a lot of these places, Sydney and Melbourne, Sydney median house price 1.2, whereas Melbourne's, almost $1 million. They're pretty significant. those cities are going to get some attention when it comes to this stuff. Yeah, there you go. Ashley saying, you know, a 4-bedroom, 2-bedroom, 2-bathroom, $1 million in Canberra. Yeah, crazy times, hey? You know, that sort of, that pricing will catch up, Ashley, you know, and flow through into sort of median and average values as well. Bob still doesn't like strata fees. Fair enough, Bob. I'd sort of agree 9 times out of 10, unless you have a building that you buy into that actually brings extra value for those fees. We might talk about that at another time when it comes to the quality of these opportunities in apartments. When it comes to infrastructure, location, you know, amenity, those sorts of things can add some excellent value. All right, folks. Well, maybe that was a little bit of a short one today, but hopefully you're awesome and well wherever you are. Hopefully that wasn't too data-heavy, data-driven this morning. You guys leave me a comment in the chat if there's something that you think you'd like me to discuss at some point. Good opportunity in that space when it comes to considering the idea that apartments might play a small but powerful part in your portfolio. Just maybe, my call very soon in this next decade, I think the apartment world will be very, very competitive in comparison to the house world as we get different generations come through wanting different things. So anyway, that doesn't mean you shouldn't buy a house. Absolutely add land to your portfolio. Land is fantastic, but as we always know, a little bit of design on your portfolio when it comes to your diversification, your property style, and your location. Super important. You guys know this as we go. So, all right, folks, that's it. Wealth Coffee Chat done and dusted. I forgot to say, if you're still here, just remember, this thing's a marathon, not a sprint, and it's all about buying well and never sell when it comes to property investing. Had to get my little sayings in there at least every day. All right, that's it. I'm waffling on, talking rubbish now. Anyway, see you guys. You guys be good. Take care. See you tomorrow, around about the same time, 8:05.